afternoon. This is one of our FSB support online sessions, and we're delighted to be welcoming today two speakers from Employers for Childcare, Chris Briggs and Phil Hogan from HMRC. So our support session today is on financial support within the cost of childcare for Northern Ireland. So if I can just draw your attention to the chat box at the bottom of your screen, you should see it there on the Q&A. If you want to put any comments in the chat box as you go, put any questions in and the speakers will answer them at the end of the session. So just to give a bit of background and context to the session today and FSB. So my name is Roisin Kaliski and I'm the Development Manager for FSB here in Northern Ireland. So FSB is the largest business support organisation in the UK. We've over 155,000 members across the UK and over 5,500 members here in Northern Ireland. So what is FSB? Well, it's kind of two strands of support. We have our tangible benefits. So when members pay their membership fee, they can access 24/7 legal and employment helplines. So that's directly to solicitors. So I mean, obviously for a lot of small businesses, the capabilities of having personnel in legal, in HR, in debt recovery is kind of limited. So FSB kind of provides that backup office service. So we have the legal employment helpline, we have like FSB Care, debt recovery service. If you're asked for a tax inspection, you basically hand it over to our team at FSB and they'll handle it for you. So really good tangible benefits. And then the other side of it is our policy campaigning and lobbying work. So we have a Westminster-based policy team who work with central government on particular issues. And then we all in the devolved nations all have our own policy teams who are dedicated obviously to the differences in the devolved nations. So we rely really on members. It's a member-based organisation. We rely on our members to give us the feedback, to raise the issues with us, to complete the surveys and the research so that we're making really informed calls to the decision makers around the issues that are affecting small businesses. So in terms of that, I mean, obviously over the last 18 months, there's been a lot on COVID and Brexit and the transition period. And then there are other things that always come up, the likes of broadband and small business rates relief. So issues that are really affecting how small businesses are able to operate. And of course, we know that small businesses are the backbone of the economy here and employ more people than the public sector and big business do together. So it's a really vital part of the economy, and FSB are there to ensure that our members and small businesses have a voice to the decision makers. So one of those topic areas is around childcare. And a number of years ago, we would have quite a few members who are childcare providers, and they came to us and said, look, the costs are spiraling out of control here because we're being asked to do particular things to follow regulations and guidelines, and it's impacting our overheads, and we're having to pass that on to the parents, and it's really getting sort of beyond. So it started a real interest for us, and we've been working sort of ever since with organisations like Employers for Childcare and Women in Business, and to really raise the need for a childcare strategy, I suppose, in general, but improved investment in the whole childcare sector to make it quality and make it more affordable for families who want to work and continue working. And I know myself, having raised a family, I relied on the childcare vouchers to make it affordable for us to continue working, both as working parents. So we see it as a real barrier to working parents, either continuing in the economy or starting a business, and particularly I suppose females being able to start a business. So there are real barriers there that we have been making calls to decision makers and campaigning for to try and increase the awareness that we need a proper childcare strategy in place, that we need investment in childcare to assist the economy overall. So Aoife from the Employers for Childcare came to us and said, look, could we do a session that would raise sort of awareness of what is available for families out there, because there is also that notion that some people think they're not eligible for certain assistance with childcare. So we're laying out today what is available there, and of course it's going to be beneficial for employees, but also really beneficial for the employers, because they can tell their employees that this is available to them, and it will help their access to labour if working families are able to continue to work. So I am going to hand you over now to our two speakers. So Chris from Employers for Childcare is going to kick us off, and Phil will follow up then behind him on that. As I said, if you want to stick any questions in, any comments as we go along, I know the two gentlemen also have their contact details available at the end. So if anyone has specific questions on their own, because I know everybody has different cases. So, don't miss out because you think you're not eligible. And that's what we really want to try and raise awareness for today. So Chris, I'm going to hand over to you. Let me just see if I can get you up here. Okay, Chris, away you go.
Thank you, Roisin. As Roisin said, my name is Chris and I'm a Senior Family Benefits Advisor with Employers for Childcare. And also joining us with us today is Phil Hogan from HMRC. We're here today, as Roisin said, to talk about the financial support that's available to assist working parents with the cost of childcare. And this could be an issue that's of personal interest to you, or could be something that employees have mentioned to you about an issue that is affecting them. And as we said, we're happy to take questions at the end. It'd be fair to say that the past year has been turbulent for many, if not all of us. Daily, the team here at Employers for Childcare has spoken with working parents, employers and childcare providers, all impacted by COVID-19 pandemic in some way. And the vital role of childcare to the economy has never been more clearly demonstrated. Access to a broad range of financial support schemes has been particularly critical for smaller employers struggling with the drop in income, and for parents who have maybe been made redundant or seen their household income fall due to furlough or due to the self-employment income support scheme. Against this backdrop, in recent years, there's also been some seismic changes to the landscape of financial support with childcare and other household benefits. And that's from the closure of childcare vouchers to new entrants, the introduction of tax-free childcare, and the rollout of universal credit. As many employers report that they are struggling to attract the necessary staff that they will need to fully return to the pre-pandemic levels of service, through this webinar, we will ensure that you're familiar with the financial support options that are available with the cost of childcare, and perhaps more importantly, reassure you that you as employers don't need to remember it all. Our team is here to help and advise and to guide you through for yourselves and also for your current and future employees. Just as a brief introduction to Employers for Childcare, we are a charity and a social enterprise. We're based in Lisburn, but we operate right across the UK. We administer a childcare voucher scheme, but also through our charity, we operate an independent family benefits advice service. In the year 1920, the Family Benefits Advice Service identified almost £12.6 million in financial support. And that's support that's over and above any entitlement that the callers already may have had at the time. So why is this webinar relevant to you? In Northern Ireland, childcare costs equate to the largest household outgoing for a third of families, ahead of both mortgage and rent payments. And yet we as benefits advisors, we know that there are a significant number of working parents in Northern Ireland who are not currently benefiting from any financial support towards the cost of childcare. This could be because they don't realise that they're eligible. For example, many people assume that their household income is too high, or maybe think that they're not eligible because they're self-employed. In fact, with tax-free childcare, a household with an annual income of up to £200,000, including where a parent is self-employed, could be missing out on thousands of pounds each year in support with childcare costs. Where childcare is unaffordable, this can be a barrier to parents staying in or progressing in work. And that's an issue for employers, particularly as we look forward to the economy opening up again. Because there's a range of support options, it can be a complex landscape, which is why we're here today to give an overview, and our contact details are available at the end for any further questions that there may be after today. So whatever category you fall into, we're sure that there will be some useful information for you to take away from today. The majority of working parents are entitled to some form of financial support towards the cost of registered childcare. So we always tell people not to make assumptions about what they may or may not be entitled to. There are 4 main forms of support, 2 which are no longer available to new claimants, which is the childcare element of working tax credits and the childcare voucher scheme, and also 2 that are for new claimants or claimants who have a change of circumstances, which is universal credit or tax-free childcare. And I'll be going into more detail on these forms of support along with Phil, and also touching on the workplace nursery scheme as well. Across all the forms of support, there are some common factors that affect what you may be entitled to and also how much you may be entitled to. One of the key things is that it has to be registered childcare that you are using. There isn't any help towards unregistered childcare costs. But each form of support will have different working hours criteria and earnings criteria. And as well as that, the amount of money that you actually receive will be dependent on a number of factors, such as your employment status, whether you're single or part of a couple, and obviously also how much your childcare costs are and your household income costs as well. So first, to talk about childcare vouchers. Now, as has already been mentioned, the childcare voucher scheme has closed to new entrants, but there are many employees who are still using this existing scheme. And that's right through small, medium and large companies, as well as the public sector as well. The childcare vouchers are a tax and national insurance exemption scheme, and it was only ever available through employers who had joined up to that scheme. So while it closed to new applicants in 2018, as I said, there's many people who are still currently using this scheme. Where both parents were able to access the scheme through their employer, then both parents could claim, effectively doubling up on what their savings were. And it was available for children up to the age of 15 or 16 if they were registered disabled. It works as a salary sacrifice scheme. So while a parent normally would get paid into their bank account, through the childcare voucher scheme, a part of that payment comes off and goes directly into a childcare voucher account instead. The maximum amount that can be taken in childcare vouchers is £243 per month or £55 a week. And if a parent is taking that maximum amount, then per year, the total savings would be £933 per year. And that's a saving in tax and national insurance. And the parent then uses that childcare voucher account to pay directly to the childcare provider. As I said, the childcare vouchers, they are free of tax and national insurance for the employees. And because of that, they're also exempt from employers' national insurance. So there is a saving that employers can make by using the childcare voucher scheme. Every childcare voucher administration company will take a proportion of the savings of 13.8%. But there's always a net saving then there for the employers who are offering the scheme for their employees. So the greater the amount of childcare vouchers that are ordered or used by the parents, then the greater the savings will also be for the employers. And that was one of the key things that attracted employers to be able to use this as a scheme to help their employees with the cost of registered childcare. Obviously, because of COVID, many employees had to pause or reduce their payments into the childcare voucher scheme. And that may be just because they had not needed childcare during lockdown because they were maybe on furlough or working from home more. But also a lot of the childcare providers were maybe closed for a period of time, so they weren't actually able to use childcare. So we are encouraging and making sure that parents remember to go back to their childcare vouchers and reassess how much they will actually need and add the amount back onto their childcare voucher account. Where childcare vouchers are paused temporarily, parents must make another salary sacrifice into their childcare account within every 52 weeks, or else they will lose access to the childcare voucher scheme. Just to touch on backdating of childcare vouchers, and this particular bit of information is maybe more relevant or is more of an impact towards the end of the tax year rather than now when we're just into the 4th month of it. But what backdating does is that it ensures that parents and employers get the most benefit from the childcare voucher scheme. It's permitted by HMRC, but it is at the employer's discretion. And it's where parents retrospectively claim their full entitlement for the tax year if, for example, due to COVID, they've been salary sacrificing less than the maximum allowance per month. So in the example given where the parent is sacrificing £200 per month, that's £43 less than what the maximum would be. So instead of saving across the year £768 on their £200 salary sacrifice, by backdating and increasing their salary sacrifice for the final 2 months of the tax year, they would save an extra £165 over the last 2 months of the tax year, taking their total saving back up to the maximum of the £933 for the full of the tax year. Also, in the past, prior to April 2020, there was an issue for employers regarding the national living or national minimum wage and childcare vouchers. And what that meant was that employees who were at or close to the national living wage were unable to use the childcare voucher scheme if the salary sacrifice brought them down below this level. And that caused some problems for employers whose employees wanted to use the scheme. Some examples of when employers maybe got caught out by inadvertently paying employees at less than the national living wage is perhaps when an employee requested backdating of childcare vouchers and therefore increased their salary sacrifice, or if there was a rise in the national living wage, as there would be an annual rise in it, or if a parent reduced their working hours. And in all those situations, if the salary sacrifice amount wasn't reviewed, it could have meant that after the sacrifice was taken off, the employer was actually seen to be paying the employee at less than the national living or national minimum wage for the number of hours that they worked. So from April 2020, employers will no longer be fined if their salary sacrifices brings the hourly rate below the level of the national living and minimum wage. Obviously, that's a good thing for both employers who want to offer the scheme to all their employees, but also to employees who maybe the childcare voucher scheme was the only option for them to get any help towards registered childcare costs. And with the childcare voucher scheme closing, there are some ways that current employees who are using it will lose their eligibility. So even though the childcare voucher scheme may be the best form of help for families in particular circumstances, if they start to use tax-free childcare or move to a new employer or don't make a salary sacrifice for 52 weeks or more, in any of those circumstances, the employee will not be allowed to go back into the childcare voucher scheme, even if it is the best form of help in their particular circumstances. So that was a quick run through the childcare voucher scheme. I'm delighted now to pass you over to Phil Hogan from HMRC. And his team has been of invaluable assistance to us at Employers for Childcare. And he'll explain the tax-free childcare scheme to you before passing back to me, and I'll take you through the other forms of support that are available. So over to you, Phil.
Thanks very much, Chris. So yeah, I'm Phil Hogan. I work for HMRC in the tax-free childcare policy team. I joined the team in 2019. Just to say, HMRC administer tax-free childcare, although the policy is driven by HM Treasury. So if we can just go to the next slide, please, Chris. So what is tax-free childcare? It is support for working parents with their childcare costs available across the UK, whereby the government provides a contribution towards that cost. It's an online service, but it's not digitally exclusive. An application can be made over the phone to the childcare service. In that scenario, the caller will be taken through the screens like someone would do it online. We would recommend that if you can do it online, that's the way to go. It's easier to manage the account. As it says on the slide, for every £8 a parent pays into the online account, the government will then add an extra £2. And this is up to £2,000 per year, unless the child is disabled, in which case it's up to £4,000 per child per year. It's for children from birth until the age of 11 or up to 16. They stop becoming eligible on the 1st of September after the 11th birthday, or if they're disabled when they turn 17. Both parents need to expect to earn a certain amount for 60 hours on average. This is at least the national minimum wage or the living wage. If you or your partner have an expected adjusted net income over 100,000 in the current tax year, you will not be eligible. This includes any bonuses you expect to get. So in essence, both parents earning between £142 a week and up to £100,000 a year in adjusted net income will be eligible for TFC. If one parent isn't working, normally that family won't be eligible for TFC. Sorry if I keep going into abbreviation mode. TFC is tax-free childcare, and I do apologise. Perhaps I should be using the full term. So a family of 2 working parents, each expecting to earn 90,000 a year, would be eligible for tax-free childcare, as long as they meet the other eligibility requirements. And single parents can use tax-free childcare if they meet the eligibility criteria. As it says on this slide, you cannot get tax-free childcare at the same time as tax credits, universal credit, or childcare vouchers. But tax-free childcare is available with other childcare offers from the Northern Irish, the Scottish, and the Welsh, and the English administrations. We think it's a really good offer. If you're eligible and currently spending £10,000 per annum on childcare, using TFC will give you a saving up to £2,000. Can we move on to the next slide, Chris? So on this slide shows what you can use TFC for. By approved childcare, we mean that the childcare is setting and registered with inspector by one of the health or social care trusts or the Northern Ireland Department of Education. The main principle is that the childcare provider is signed up to operate tax-free childcare as well. Okay, Chris, if you wouldn't mind moving on to the next slide. So these are common questions specifically, Phil, to Northern Ireland. As I said, CFC, Tax-Free Childcare, is a UK-wide scheme. Parents in Northern Ireland are eligible for tax-free childcare if they meet the eligibility requirements, the same as parents in Wales, Scotland or England are. Where things start to get tricky is when it comes to cross-border circumstances. So, am I eligible if I live and pay my tax in Northern Ireland but use a childcare provider in the Republic of Ireland? The answer is usually yes, as long as the Irish government have approved that provider. But because we can't check that provider in the Republic of Ireland as an approved provider, you will need that parent to complete a slightly more detailed version of the application, which can be done by phoning our childcare service helpline. The childcare service number is on the side and is available from gov.uk also. It's a similar answer for the third question on the screen. Will I be eligible if I live in Northern Ireland but work in the Republic of Ireland? Again, usually yes. If you're eligible, you'll need to complete a self-assessment tax return to register your earnings with HMRC so that we can assess your eligibility through our systems. So basically for cross-border scenarios, we'll ask you in the first instance to contact the childcare service helpline for advice. If we can go on to the next slide, please, Chris. So we've given some thought to what it might be specifically be helpful for SFB members who might benefit from tax-free childcare. Just to be really clear, we're not advising anything here, just flagging some considerations taxpayers might want to take into account around tax-free childcare and structuring their affairs. So the first part is for small business owners. To meet our minimum test, that's the 142 figure I mentioned previously, owners, directors of small businesses will need to be paying themselves enough in wages to make that. So they need to be doing it no less frequently than quarterly, every 3 months. So for example, if they were paying themselves quarterly, they would need to pay themselves £1,846 or over each quarter to remain eligible. Now on dividends, they don't count for our minimum income test as they are not income from work. However, for our maximum income test, the 100,000 figure I mentioned, it is really more like a means test. So you do count for that. So that might be something to take into account if you want to use tax-free childcare. If you wouldn't mind going to the next slide, please, Chris. This is also advice for FSB members. If a parent's adjusted net income is just over 100,000, they could choose to make extra pension contributions to reduce it down and remain eligible. We have no objection to that, but don't advise it. It's totally up to the parent. We also recognise that certain types of income profiles, such as farming, don't allow for paying themselves every 3 months or less. So for self-employed parents, tax-free childcare allows them to meet the minimum income test by reference to their incomes across the current tax year. But if they are running their businesses via a limited company, the rule I explained earlier about owner directors of small companies needing to pay themselves every quarter or less comes back into play. Again, just something to think about. We can go on to the next slide, please, Chris. And this slide is basically how do I apply. So this is done via gov.uk, online via gov.uk. The relevant link is on the screen. You will create an online childcare account to pay funds into and receive government top-ups into your account. The account would then be used to pay your childcare provider direct, who must also be signed up for tax-free childcare through an approved regulator, such as one of the Health and Social Care Trusts in Northern Ireland. For every £8 into the account, the government will pay £2 top-up. That would give you £10 towards childcare costs for each child. If you wouldn't mind going on to the next slide, please, Chris. So this we've just put this slide in as just for sort of information, and there's some tax-free childcare myths. The first one is my child, well, as well as my child is too old, also are they too young? As I've already said, your child is eligible from birth until the September following the 11th birthday, unless it's a disabled child, which again is up to the 17th birthday. Using tax-free childcare will affect my tax, I claim. Tax-free childcare, despite its name, has nothing to do with a person's tax liability. It's a government top-up towards parents' childcare costs. The next two slides are questions and answers. We've included these common question and answers to hopefully provide some clarity, and that's the reference point for FSB members on considering whether to use TFC, tax-free childcare. Some we have already covered. First one, can I get tax-free childcare if I'm a higher rate taxpayer? Yes, because eligibility isn't dependent on how much tax you pay, so it won't affect your income tax liability. Will my employer deduct my tax-free childcare payments from my pay? No, because you as the parent will be running the tax-free childcare account. A single parent can get tax-free childcare. And can I use my child account to pay my childcare provider? They're not signed. No, they need to be a registered childcare minder. We'll go on to the next slide, please. Again, these are just as I said earlier, just common question and really just a reference point if these slides are shared with you as members. If we wouldn't mind going to the next slide, please, Chris. So this slide, promoting TF's tax-free childcare. Tax-free childcare was brought in to replace childcare vouchers, as Chris has said, closed to new entrants in October 2018. Childcare vouchers was only ever available to employers. However, lots of people still haven't signed up for tax-free childcare. FSB members or their employees may be missing out. So we have some commons products available to circulate, which can be found on the link below on this slide. And then if we can just go on to helpful links. The first link is to the TFC, Tax-Free Childcare information page on gov.uk. What you can use tax-free childcare for, eligibility criteria, with quite a bit of detail. The second link is to Childcare Choice's website. Now, this website has material beyond tax-free childcare on government support on childcare that is available. The third link is the application link through gov.uk in which you apply for tax-free childcare. I'll now pass you back to Chris to continue with the presentation. Thank you for your time.
Thanks, Phil, for that. As you can see, with childcare vouchers and tax-free childcare, it can be quite complex which one's going to be best in particular circumstances. So just a couple of case studies. These aren't real scenarios, but they are relevant examples to compare the savings between the childcare voucher scheme and tax-free childcare. So in this example, we have a couple, Amanda and Bill, who are paying £90 a week for an after-school club for their son, Freddie. Both are eligible for the childcare voucher schemes, and they also meet the criteria for tax-free childcare. Because their bill is less than the maximum £243 each per month, then they just split the costs 50-50 and both sacrifice £195 each from their monthly salary for childcare vouchers. So in this case, both parents make a saving of £62 odd per month, meaning their joint monthly saving is just under £125 through the tax-free childcare scheme. They are both eligible for tax-free childcare. And through the tax-free childcare scheme, the government will give them a straight 20% of their childcare costs. So each month, in this case, the government would give them £78 per month by topping that amount up into their tax-free childcare account. So it's clear in this case the couple are better off continuing to use the childcare vouchers, it giving them just under £125 versus the £78 through the tax-free childcare scheme. This second case study is slightly different. We have a higher rate taxpayer as well as childcare costs that fluctuate throughout the year. And we at Employers for Childcare, we would have many queries from parents whose childcare costs fluctuate because they've got school-aged children, and then whenever it is the holiday time, as it is now, they potentially have much higher childcare costs during that period of time to cover the longer holidays. So in this case, Tara and Amina have two girls. For 38 weeks of the year, they're paying £55 a week for Hema and £46 a week for Gita. And then during the holidays, they pay for 7 weeks of the year, £130 a week for Hema and £78 for Gita. So across the year, although their childcare costs fluctuate, their total childcare bill is £5,301 annually. Taryn is a high rate taxpayer who receives the childcare vouchers, but Amina, being self-employed, is not eligible to get the childcare voucher scheme. But they do both meet the eligibility criteria for tax-free childcare. So as a higher rate taxpayer, Taryn's maximum salary sacrifice is £124 a month, and therefore he makes a saving per year in childcare vouchers of £623 in tax and national insurance. And that's the maximum they can save because Amina is self-employed and can't get the vouchers. Through tax-free childcare, they get the flat 20% of their childcare costs. And their total childcare bill being £5,301, they would receive a top-up each year of £1,060 per year. So in this scenario, the family is better off using tax-free childcare by over £400 per year. Even if both of them were basic rate taxpayers, they would still be better off on the tax-free childcare scheme because it's only Taryn who can access the childcare vouchers, and therefore his maximum savings would be £933 a year, which is still less than what the tax-free childcare is as a total. So moving on now to the other two forms of help, tax credits and universal credit. As I said before, tax credits is one of the things that is for existing claimants only, as it has been replaced by the childcare voucher scheme. It's a means tested benefit, so it depends on both what your household income is and your circumstances. Usually based on your previous year's income. So if you are an employee, be based on your P60 figure, or for self-assessment based on your previous year's earnings. However, HMRC can base it on what your current year's income is if you have a significant change in income. For example, if you're a mother who's off on maternity leave and therefore have a much lower income in a current year, tax credits can change the calculation to base it on this year's income. Depending on what a change of circumstances a household or a family may have, claimants may have to move to universal credit, even though they're a current tax credit claimant. The childcare element of working tax credit is 70% of your registered childcare costs, and that's up to maximum costs of £175 a week if you've one child, or £300 if you've two or more children. And it's up to the age of 15 or 16 if the child has a disability. As I said, it is means tested, so while they include 70% of your childcare costs in the calculation, the actual amount you get depends on income and circumstances. But just to give an example, if you have two children and maximum childcare costs of £300 a week, you could have household earnings of up to £59,000 and still have some entitlement to tax credits. The way the childcare element works is that as a current claimant for tax credits, you would inform HMRC of your estimated childcare costs, and they will then add an amount to your current tax credit award. The claimant receives the payments directly into their bank account, and it is up to the claimant then to pay their childcare provider in a timely manner. HMRC will contact the childcare provider directly in order to verify the childcare costs that have been reported to tax credits. So that was a quick run through working tax credits. Now moving on to universal credit. And universal credit is the replacement for tax credits, as I've already mentioned, but also lots of other benefits, whether you are in work or out of work. It has replaced everything that is on the screen at the moment. Depending on what your household circumstances are, it may mean that you have to come off one of these old benefits and move on to universal credit instead. Because it replaces all those other benefits, it is for working age people, so over 18 and under state pension age, and includes support that covers all the areas that those former benefits covered. So it has elements for housing, for children, for childcare, as well as support for disabled people, carers, and people who are unable to work due to illness or disability. The income information, as a claimant, you don't report it to universal credit. Universal credit gets it directly from HMRC through the real-time information reports that employers put in. And it is a digital service where claimants do everything online and have access to a journal to report any change of circumstances that they may have. The childcare element of universal credit is 85% of childcare costs rather than the 70% that there was through tax credits. But it's still up to the same maximums of £175 a week for one child or £300 for two children, and again up to the age of 16. So it is a means tested benefit as well as tax credits was, but while 85% is used to calculate your entitlement, again, the actual amount you get may be dependent on your income and circumstances. It is generally less generous than what the old tax credit system was. So to use the same example of two children using maximum childcare costs, the earnings threshold would be around about £57,000 rather than the 59 that it would have been through tax credits. The way the childcare element works is also different to the way it works in any of the other forms of help with childcare costs, because the parent has to pay the childcare provider upfront for all their childcare costs that are billed within an assessment period. The parent then submits the invoices and proof of payment to universal credit and waits to the end of their monthly assessment period. And then the parent receives a reimbursement towards the cost of childcare that they have used. These upfront childcare costs can actually represent a barrier to parents taking up work or moving into more hours of work, as they have to wait for that reimbursement to come through. There is extra support planned within Northern Ireland for these upfront childcare costs, and that's due to come in from October whenever the legislation goes through. And that will be where having to pay for childcare costs is a barrier to someone who is moving into employment. Very quickly to then talk about the workplace nursery scheme. Workplace nursery is where a nursery has been provided for by an employer for the employees to use, and the cost of this can be paid through a salary sacrifice scheme. The key thing about a workplace nursery is that it is the full cost of the childcare place that an employee has to pay for, that is completely exempt from tax and national insurance, and is therefore also exempt from employers' national insurance as well. So unlike the childcare voucher scheme, which had a maximum of 243, with workplace nurseries, it's the full cost of the exemption, as long as the workplace nurseries are eligible, and the exemption rules are on the screen there. So the cost is totally exempt from tax and national insurance, but the nursery doesn't have to be at the workplace. It can be at other premises, as long as it is managed and financed by the employer. So that was a very quick run through all the forms of help that there are towards registered childcare costs. We are here to help, both as ourselves, the Family Benefits Advice Service and HMRC. As the Family Benefits Advice Service, we don't just talk about childcare costs. We look at everybody. When someone contacts us, we look at every circumstance that they're in, including childcare, any other benefits that they may be entitled to as well. And particularly at this time with COVID affecting so many businesses and so many families, we've had lots of different types of conversations with people regarding flexible working or redundancy entitlement, or changes in their entitlement, which has maybe made them move across to universal credit from other benefits that they may have been on. So we're here to talk to people about their full entitlement. From an employer and also an employee point of view, we're here to support you and your staff. So we can share, obviously, information about the Family Benefits Advice Service, but we can also do parent information sessions for employees or take referrals from from HR teams for existing staff members or new staff. Our details are available on the coming slide with free phone numbers, but also online we have fact sheets, reports and information videos that cover all the forms of help with registered childcare and many other information as well. So there's our details for both ourselves at Employers for Childcare and for HMRC as well. Thank you for taking the time and having myself and Phil here to give the information, and we're happy to take any questions as well.
Thank you very much, Chris and Phil, for really insightful and a lot of information there. I see a few questions just coming in. Now I think Phil, you've answered one there. Just Maria just wanted to check that it was each parent can earn up to 100,000 each as opposed to a joint household income of 100,000. So you said yes, each parent can earn up.
Sorry, Rosalind. Yes, both parents can earn up to £100,000 and get tax-free childcare if they meet the other tax-free childcare eligibility as well.
Lovely, nice problem to have.
Yeah.
I see one then, another one just from Maria. So Chris, would daycare settings be classed as workplace nurseries for their staff?
Yes, they can be, yeah.
Okay, Maria, hope that's helpful to you. And Maria, again, get in touch then with Chris if you want to find out more about that specific case. Jack, the myth is real for tax-free childcare. When the children are 11 years old or older and not disabled, are we meant to leave them at home alone, or do we get them a job and send them out to work? Well, it's a fair point, and I have a few in that position myself. Was there any?
Unfortunately, for tax-free childcare, it does stop at 11 years old or the September after the 11th birthday. Unfortunately, there isn't any other support as far as that's concerned. There may be support through universal credit if it's a new claimant onto the scheme and they meet the other eligibility criteria.
Okay, thank you. Another one, just Chris, the ADF fund to cover the upfront cost of the first payment of childcare for parents on universal credit is available from the 12th of April 2021 as outlined in the release from Minister Hargay. I'm working with some parents and the UC office to secure funding for them. I think that's maybe just more of a comment than a question, is it? Can you see that one there, Chris? Just in the... So the ADF fund to cover the upfront cost of the first payment of childcare for parents on universal credit is available from the 12th of April 2021. Well, so that's just to let us know.
Yeah,
that.
what the thing that's changing from October, or hopefully changing from October, is that universal credit will not treat it as income from October onwards. So it's a change in the rules the way universal credit treats it, which means that parents don't have the same problem the following month. So it's for it's the rules around universal credit that are changing that will help parents from that point onwards for who are moving into registered childcare.
Okay, great. And there's just another question just around that nursery setting about staff within workplace from Gary there.
Yes, again, it can do, yeah, as long as they meet other eligibility criteria, yes.
Okay. Just then, a couple of other questions. So the childcare voucher scheme, then an employer who doesn't currently operate a childcare voucher scheme, they can't set one up now because that's stopped? Or
yeah, so as far as the childcare voucher scheme is concerned, the only way or the only reason why a employer would set up a childcare voucher scheme now who have never offered it before would be if it's a two-pay situation. So if they are moving other employees across because of a buyout of another company and they're two-paying other employees across, they could set up the scheme to allow those employees who from their other company were in a childcare voucher scheme to give them access to the childcare voucher scheme as part of their continuity of employment in terms and conditions. But it would still be the case that the employees of the original employees of the company wouldn't be able to access that. So it's only in very restricted circumstances that an employer would set up the childcare voucher scheme now.
Okay, thank you. Just another question there around the savings there were for employers through the childcare. Is there something similar, a provision on a saving through the tax-free childcare as such, or is it they don't make any saving?
No,
yeah. If you can you get that, Phil?
Yeah, so no, tax-free childcare is for working parents. It's nothing to do with employee relationship. It's a government top up contributing towards your childcare costs.
Yeah, no. So but it still has, I suppose, the ripple effect benefits, of having your employees accessing as much assistance as they can will obviously help the workforce. I don't see any other questions or comments in there on that, but as the two gentlemen have said, look, they're happy to be contacted, regarding any of the questions. And Chris, you mentioned that you can do for organisations or businesses, you could do like an information session for.
Yes.
Well, obviously at the minute it may still be virtual, but
yes, we can do an online session for employees, whether that's existing employees or maybe new employees into an organisation. We can give information about the forms of help that there are available. Obviously, we can also do one-to-one information for parents who just phone our free phone line or do it as a Zoom call, whichever works best for them. But where a lot of employers and other organisations would organise a group information setting, which we would come along to and do a presentation similar to the like of this, but maybe more focused on the benefits side of things. So we can do that for employers, absolutely. There's no problem at all. And just contact us through the email address and we can set that up.
Great, perfect. Look, so much information there, really valuable information. And we can see the benefits for both sides, for the employer, the employee, and how it will help the economy along. And, as you made the comment, I know people who just think, oh, I wouldn't be eligible because, and until they actually ask the question or do that bit of research, they'll not know. And, we would encourage employees and employers alike, to get in touch and get, the information, because you could be missing out on benefits here that, you are eligible for. So look, thank you so much for giving us a really insightful look into what is available for childcare assistance here. We will continue, FSB will continue to work with various organisations and with our members to ensure that the childcare strategy is pushed forward, and that there is improved investment in childcare structures overall, because we can see the real value and benefit on having a working system and a quality system that will enable our economy overall. So thanks to everyone for attending today. I know there was a lot of information. We are recording this session and it will go out through our social media once it's ready, and through our, if you're a member, through our newsletter. So we would encourage you as well to share it with your staff, share it with your colleagues and peers and fellow organisations and businesses, because it's really important to get that sort of message and awareness out. So look, thanks to Chris and Phil once again, and thanks to your teams as well for all the background work that they've put into today and the work overall. So thanks once again. All the best. Bye now.
Bye.
Thanks, Rosin. Thanks, Chris.